Joining us now exclusively is Steve Lamar. He's president and CEO of the American Apparel and Footwear Association. Steve, thank you so much for being here with us. We have spent much of the last year or so talking about the impact of tariffs on the retail industry. By and large, I actually think most of them dealt with it fairly well, and the consumer held up. So, were they really that bad? Even if they get lifted now, does that actually provide any kind of a tailwind to these retailers?
Well, the phase one deal that will be signed in the next couple of days gave us some relief, but it's very limited relief. Here's the facts. All of the tariffs that we were paying the day before the phase one deal was announced, we'll still be paying them the day after the first day after the phase one deal is implemented. The phase one deal reduces some tariffs, but it leaves all the other tariffs in place.
And when you mean all the other tariffs, you mean the ones left over from the 1930s?
No, for sure those, but I'm talking about the ones that the Trump administration has imposed. So 25% for your handbag, 25% for your wallet. Right now it's 15% for most apparel and about half of the footwear. That will drop to 7.5%, but that will still be in place.
And so when you talk to your members, we often look at the big retailers and say they have a lot of levers that they can pull, and they've told us as much, to figure out how to mitigate these increases so that the consumer doesn't end up paying for them. That may mean, however, that the vendors, the manufacturers are getting squeezed. So just for example, if you're a Walmart, you're asking Procter & Gamble or maybe a much smaller manufacturer of items to take on that increase. So is that really where the pain you think will continue to be felt?
Yeah, we paid $20 billion in tariffs last year. This is $4 billion more in tariffs than we paid 2 years ago. So this is real money. It's not pocket change. It's got to be paid by somebody. It is paid to the U.S. government. So Uncle Sam is still taxing us to get dressed every morning. People are being creative to try and mitigate the tariffs. A lot of that was pushing the tariff costs into 2020. As these tariffs continue, we expect to see that those prices may increase, or we may begin to see the tariffs built into the cost of products. So it will begin to happen.
What was your assessment of the holiday shopping season, and have we seen quite a significant drop-off as we've started into the new year, or has the momentum continued?
I'm hoping the momentum will continue. The good news is people are back at work and they went to the stores, and those that didn't go to the stores, they went online. I think the lesson of the holiday season is that price matters, it still matters, and convenience matters. We saw a great deal of e-commerce, and more customers are looking for e-commerce as a way to satisfy their fashion desires.
As you look at some of these holiday sales numbers, they don't look all that inspiring. If you haven't followed the industry that closely, you're going to say, wow, they're all down across the board. But then MasterCard says total holiday sales up 3.4%. So what's the disconnect? Macy's certainly has a website, so there's e-commerce in that number.
I think people did well. Some people did well on some things, but not on other things. And, we're hoping to see that continue. There's very good consumer confidence. I will say there's a lot of uncertainty that's still out there. Perhaps the worst of the uncertainty might be behind us. We had some, good news in December, the budget deal. We saw the USMCA get approved in the House, the phase one deal announced. Again, some relief, but we're looking forward to seeing those details. So perhaps the worst of the uncertainty is behind us. And if the government can execute on all of these things they did in December, maybe that uncertainty will continue to drop off.